Hello, everyone, and thank you for joining us today. I'm Taylor Comblusier, a mining analyst at Red Cloud Securities. Today's webinar features Matt Watson, who is the founder of Precious Metals Commodity Management. There, Matt is helping industrial clients with precious metals consulting services, market reports, and supply chain management expertise. He is an operations executive with over 30 years of international and domestic experience, including various engineering, statistical consulting, and supply chain commodity management positions. Great to have you with us today, Matt.
Oh, thanks for having me.
So the format of today's webinar will be comprised of two parts. In the first part, Matt will give a presentation focused on copper, nickel, zinc, and PGMs, critical minerals in the clean energy transition. The 2020s and 2030s will be decades focused on clean energy and mineral constraints. So this is a very relevant topic to be discussing. And then in the second part of the webinar, we'll take your questions live. So please send them in using the chat and we'll get to as many as we can. I'll note that you can type in your questions at any point throughout the presentation. So to start, we'll handle the disclosures and then get into it. So for Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for company-specific disclosures. So with that out of the way, I'll turn it over to Matt.
Well, thank you again. Thanks for having me. Again, my name is Matt Watson, precious metals and critical mineral commodity expert based in the San Francisco Bay Area. I've been kind of grew up in the PGM world, was a big fish consumer for many years in the hard disk drive industry. Did that for a decade. I was head of business development for Tanaka, one of the big five precious metals groups for a number of years. And now in the past 5, I've spun off on my own and doing my own market research and analyst type of activities. Everything that's on this periodical table here, I have different clients that are touching, and I've done reports on each one of these. It's just amazing how much of the periodical table is involved in this clean energy transition. It's just rather remarkable. And as stated, today we're going to focus on copper, nickel, zinc, and PGMs, which, you know, how much can you really cover in 20 minutes? We're just going to touch on it very quickly. So let's proceed. Next page. How do I next? Here we go. What's driving activities? Macro perspective. Well, clean energy, this clean energy transition, and more they're looking at what they call the levelized cost of energy for different technologies, and they're seeing solar and wind have come down and in a range that they feel is compatible or comparable, if you will, with fossil fuels. Just one risk I do point out to people: this is a metric called levelized cost of energy. This is an operations metric, meaning this is the cost when the sun is up and the solar is actually being generated. That's how much dollars per watt it costs. But of course, solar is only up a third of the day, so the fully burdened cost would be much different. And so on highly variable renewables like solar and wind, you got to be really cautious using these. And yet, it's interesting, you look at IRENA, the International Renewable Energy Agency, they put out roadmaps. Back in 2018, their first roadmap, they wanted to see us get to a state where the global power grid was 14% renewables by 2050. That was the state in 2018, but they wanted to see us get to 23% mix of renewables by 2050. Just a few years later, they changed the roadmap. They said, no, now it's 74% renewables. And then last year, they came out and they updated the plan once again, saying, no, now the plan's 90% renewables. This includes over 65 to 70% variable renewables in wind and solar. So a very high rate of wind and solar in this mix. That presents a risk in itself, in addition to silver, copper, and a number of metals that are going to be challenged meeting this transition. So that's macro trend number one. The second macro trend that's going on is very clearly just the electrification of everything. Not only those renewables, the hydrogen economy that we hear about that's coming, EVs, 5G, smart buildings and homes. We're hearing more about that now. Of course, the Internet of Things. There's there's over 3 billion connected devices today. That's a fantastic number. We're seeing growth, obviously, in a number of electronics applications. But in all of this, between the cost of renewables becoming lower and the desire to electrify everything, it's interesting. In my simpleton view, there's just a huge disconnect between supply chain planning and the people doing this transition thinking that somehow we're going to be able to keep up from a mining perspective. And clearly we're not going to be able to. I was out there leading the charge. I started about 5 years ago pushing this theme, several years ahead of most other analysts. And now I think everybody is starting to see this quite clearly. In the past 3 years, we've seen a big shift with Tesla, Ford, VW, all the big auto OEMs, and even some of the battery OEMs now investing into their mining and their intermediate supply chains. So we're seeing this vertical integration. And, people think, somehow, Elon and Tesla and others are going to be able to bail us out. I don't think they have enough cash to do this transition on their own. So, yes, it's interesting to watch this transition on who's driving the investment, but it's still a problem. The IEA, starting back in 2020, was very precise in articulating, hey, please realize that the loadings, that these critical minerals are used in multiples over what conventional technologies use. For example, copper. We're going to focus on 4 of these critical minerals today: copper, nickel, zinc, and some of the PGMs. On electric cars, you use at least 3x the amount of copper wiring in those EVs. You also use in offshore wind, you can use 8 to 12 times more copper in offshore deployments of wind. Onshore is 3x higher. Solar PVX is 3x higher than the conventional grid. So lots of copper consumption in this discussion, as well as all the battery metals and all the rest. Obviously, nickel is primarily tied into the EVs. Nickels will be tied into the hydrogen economy as well, to a lesser extent. Zinc is interesting. We see zinc being used extensively on the wind platforms, but also on solar. It's used as a coating and all the galvanization that goes on and making the steel more robust from an environmental perspective. So all these are, I think, very critical metals that are really going to be challenged. And I'll walk you through very quickly just kind of an outline of what I see their transition state looking like. And of course, you as a mining community know better than I do that, all this comes against a backdrop where, environmentalists think they want all this mining, but they don't. They're not in my backyard mentality dominates. The list of ESG criteria the hurdles that we got to jump through is growing. The timelines taking to get from funding to operations have grown at least 50%, if not 2x in many cases. Now it's taking some 12 to 15 years to develop some of these new, even open pit mines. So it's staggering, the process and how it's changing. From a mining capital expansion trend, it's interesting that the miners themselves have been reluctant to invest in expansion. That's one trend that has been highlighted by BMO. I got some buddies in the research team there that did a really extensive analysis. And they're right. I think this really depicts the situation. And even though we saw mining investment on critical metals up in 2022, we'll talk about that at the closing. I think the pricing of the commodity basket drove that investment surge. And so I'm over here doing, I've got supply and demand models for this whole slate of metals that I was characterizing on that periodical table up front. And I do a base case versus a high demand case analysis of a long-term outlook through 2050 of the demand. And I do it against different conditions on what they're calling for from an EV powertrain mix, from all the batteries they want to make for EVs, as well as for energy storage, for solar PV, wind, fuel cells and fuel cell vehicles, and all the hydrogen they want to generate, and ammonia. And I do a base case, or let's say, well, let's give the clean energy advocates half of what they're asking for versus everything that they're asking for, is effectively the contrast between the base case and the high case. And I'm going to walk you through a whole set of forecast. The powertrain mix, my base case looks something like this, where, oops, that's a typo. That's a mistake. This chart is that's an incorrect chart. My apologies on that. The base case is a lower rate of propagation where we only get about 6 terawatts of battery demand by 2050. The high case where they want to meet all the zero emission mandates will take you closer to 15 terawatts of battery demand just for EVs, both heavy duty and light duty. And so it's a much steeper slope with the powertrain mix in the high case. Again, my apologies on this slide being faulty. I made a mistake right leading into this meeting. If you look at the auto market in general, and I live and breathe in this auto catalyst market, I'm working with all the recyclers and everybody in the PGM world in auto catalyst. We've been tracking the sales using LMC auto data, and the sales growth for the past couple decades has been pretty predictable. And here comes COVID, the bottom drops out. And then here we are trying to push not just ICE vehicles, which is gas, diesel, and hybrids, but they're trying to push the EVs as well. And so you can see the electrification percentage, the delta from the ICE up to the everything. And when you look at this chart, one of the things you see is that, it's going to take us a while to get back to pre-COVID levels. It's going to take us, we were hoping by the end of this year that the sales number would be back to 2019 levels, 2018 levels. Right now, it looks like we're still going to miss this year if I had to base on, the first half of the year. The other part of this is when does the ICE volumes match previous ICE volumes? Well, I was thinking it's going to be out here in 2026 is the likely transition point where we're finally going to get back to that level. That has a huge impact on palladium and rhodium. And for those of you tracking the palladium and rhodium markets, those have seen a lot of softness in the past year. And it just stuns me when you look at the vehicle cost. Part of what's driving this slowdown is just the price of electrification. The average price in the U.S. is just astonishing how much we're asking people to spend on these EVs. These full-range EVs are much more expensive. They'll be lucky to have 10 to 13 years of full life on the battery. At what point the consumer is going to have to make a decision. Do I spend some $15,000 or $16,000 to replace my Tesla battery and get another 10 to 13 years of additional life out of that car so it exceeds over 20 years of total life? In ICE are going to scrapyards on average at 20 years of age. So this is a pretty expensive proposition for a vehicle that's only going to last 10 to 13 years before you're going to make yet another big investment decision to re-up on those EVs. So we're seeing that have an impact on, like I said, some of the PGMs. From a nickel perspective, the base case versus the zero emission case, nickel demands are going to have a trajectory like this. Where EVs are in the orange color and the base infrastructure nickel demands are in the blue. And you can see that the auto demands will overtake that infrastructure demand. In the zero emission case, if we're going to try to meet all these dates, and specifically these 2035 dates, where all these vehicles step in and allegedly will be EV only, that takes a big push in the demand numbers, pretty dramatic. I think it's pretty unrealistic that we can even approach meeting that zero emissions case. I think that's going to be a real challenge. And what I start doing is I paint these cases, a base case and zero emission case. I put it in the context of, well, what are our known reserves? What are the identified resources? And I'll show a summary of that here in a moment. So there's nickel. One thing you really want to pay attention to if you're into the nickel mining genre is the chemistry mix of these lithium ion batteries that they're building into the vehicles. There's been a big transition that no analyst foresaw early on, where they're going to lithium-rich designs with no nickel and no cobalt in the green. The nickel and cobalt-containing varieties are these blue and yellow tones down here on the bottom. And so we're down to about 70% of the mix has nickel in it. Will that penetration of LFP grow even further? It has the potential to. LFP batteries with lithium only are cheaper. They can get the cost down for the end consumers. There's performance trade-offs with picking that LFP design. Ends up the Chinese are largely doing LFP in China. North America and Europe are going to be more nickel and cobalt centric in their designs. So anyway, you got to pay attention to the battery mix behind the scenes, what's going on, what are the latest technology transitions going on there. The other big issue on nickel I want to highlight is you got to get coached up thoroughly on obviously the emissions and the ESG aspects of this. Nickel's getting a bit of a black eye with what's going on in Indonesia, where there's been just dramatic growth in the amount of nickel mining. Of course, 40% of the known reserves are class 1 nickel, where they're iron free, they're battery grade. Processing these with a single smelting step typically will generate about 18 tons of emissions for every ton of nickel processed. Conversely, 60% of the nickel is going to have an iron element to it, whether it be a nickel pig iron or a ferronickel. Here you have a couple choices. You can either do a second smelting step to get rid of the iron, or you can do a high pressure acid leach approach, this middle level here. The Chinese are advocating this extensive use of acids, but lots of concerns with tailings management and runoff and groundwater pollution, especially in a region known as the Coral Triangle, where there's huge amounts of our coral species are vulnerable. And so there's lots of concern, I think, starting to brew now about the nature of how the Chinese have been managing a lot of that growth in Indonesia. So please pay attention to this topic and feel free to get a hold of me if you have any questions. I can I can guide you a bit on some of the research that you need to do. On the copper front, I've shown this analysis before. My base case, you climb to about 50 million tons a year of demand in the base case versus closer to 60 million over here in the high case. Keep in mind, EVs and solar 3x higher loadings. Next gen grid is about 3x higher loadings with a lot of the transformers with lots of copper. Wind is anywhere from 3 to 8x higher. And so this is a component that's driving and accelerating that demand. It's not all of that demand for copper. Again, some 75% of copper shows up in the form of wiring. It's just as we do more electronics, of course, there's going to be more copper pulled in every segment. No doubt about it. And when you look at the trend on the amount of known reserves, and you go plot out USGS data over time, this is what our reserves were portrayed as back in 1950, and you can see the progressions up to 2022. So this is the amount of reserves that we have on hand, some 900 million or 890 million tons of material in known reserves. And when you translate that and put that in the number of years of supply, you're sitting there at about 35 years worth of known supply. So certainly a concern. I put a listing here of some of the most recent projects that are in feasibility stages, just so you have a sense of what's on deck. Zinc, another metal where about half of the demand goes into galvanization processes, a lot of hot dips where you can coat steel or iron and basically prevent rusting, provide a measure of security. That's a key part of how zinc is used, whether it's in galvanizing or in alloying. And whether it's on wind or solar, basically it's all just applications of coats to help provide environmental protection. Again, with a limit on the known reserves and identified resources, what does that look like? And then finally, the one of my hot buttons is the hydrogen economy and platinum. The demand for platinum is going to skyrocket. Here, it's mostly vehicles and fuel cells that are going to consume the weight. Simply put, we don't have enough platinum, and there's no way we're going to get there on platinum. We're going to miss tremendously on how much platinum we're going to need. Fuel cell vehicles, just to give you a sense, today it's about 80x higher loadings than a conventional ICE vehicle for the amount of platinum in a fuel cell vehicle like a Mirai versus the amount of platinum in an auto catalyst today. There's some design swaps going on where they're reducing the amount of platinum, increasing the amount of palladium. By the time they're done with that transition by 2025, it'll bring it down to only about a 30x higher ratio, but still substantially higher than today. On the heavy duty, it's about 5x higher to 8x higher on diesel and heavy duty. And clearly, there's a number of analysts, not just me, that are projecting anywhere from 700,000 to about 1 million troy ounces of demand tied into this by 2030. And so I think this is an emerging demand. This is going to pick up the slack in platinum and help keep platinum under pressure. One of the sister PGM miners, iridium. Here, iridium is key to the green hydrogen production. And you're going to see a strain on this metal. Lots of concern. Do we have enough of this? How much design thrifting can we do? How quickly can we do it? I can walk you through all those storylines. I'm involved in a lot of that. How much recycling can we do? One thing we do know is that the hydrogen plant, just like the wind and solar plants, keep accelerating. They keep wanting to push this faster and faster. And so, for example, they had 69 gigawatts of electrolyzers planned in their June 21 roadmap, the Hydrogen Council did. And then just a few months later, in May 22, now they're up to 164 gigawatts of demand. And there's a mix of alkaline electrolyzers and PEM electrolyzers that use platinum involved here. I gave you the how much are going to be PEM related. The key thing here is financially committed. Very small percentages of these have been committed so far. So there's a risk here. How quickly will that funding come? How quickly will this truly ramp? Ruthenium, another PGM miner that plays a role in the hydrogen economy, same thing. It's going to play a role in smart glass on buildings. It's going to play a role in fuel cells as well. It's already playing a role in heavy-duty fuel cells. And so those cases are going to be strained. And, one of the things I think people miss is with variable renewables, this is a thing called the California duck curve. People don't realize this. I see a big risk on PGMs that nobody else sees coming. Everybody sees it tied into the use of fuel cell vehicles and the production of this green hydrogen. Yep, that's true. But the real risk is going to be as we deploy variable renewables, wind and solar at a higher rate, it ends up every location on the planet disables those renewables to some percentage every single day of the year. And as California puts in more and more solar each and every year, the depth of this trough that they call the duck curve gets deeper. And this is an expression of how much the conventional power grid needs to pull, how much does the natural gas conventional power grid need to pull power. And the daytime, they just can't reduce the conventional grid quick enough. And as a result, they end up disabling a good portion of the solar. And that amount they're disabling is growing year over year. California had about 1.5% solar penetration back in 2014. We're up to about 10% penetration now. And the curtailment levels are just growing astronomically. People don't realize this. And when it comes time to balance the power grid, this is where PGMs are really going to be needed. For whether you hear this talk of the hydrogen economy or the ammonia economy, the two top energy storage technologies that are on the roadmap, the only way to make a plan like this work is to have some huge, large-scale energy storage technology that doesn't exist today. They're playing with a list of items and a list of technologies. There's literally physical trials going on with each of these, but hydrogen, ammonia, and scale are thought clearly to be the most likely path to get us to a large-scale energy storage. And again, this tightness in these PGMs, I think, is going to play a scary role here just on how we approach this balancing the grid. There, the fuel cells will be two-directional. You may take the excess power during the daytime to generate the hydrogen and run the electrolyzer one way. And then in the evening, when you need the peak hour, peak energy demand, go the other way, take the hydrogen that you've created and generate excess electricity just to meet the peak demand. That's kind of the systems they're trying to drive us to. And so I try to summarize all these critical mineral requirements for the metals I showed you and a few others. And you can look at the battery metals and my base case versus the high case. Battery metals, yeah, we're going to, for nickel and cobalt, you're basically going to consume the known global reserves as expressed by USGS today. You got to go through about 100% of that and start digging into the next bucket, which is inferred global resources. And so you get a quick glance there at the battery metals, my electrification metals, copper and silver being the two most profound. Both of these are challenged no matter what we do. So I would argue copper and silver is a very safe bet for mining investment long-term. This one, there's just no avoiding. How about in the critical metal set? Well, I'm worried about tin as it ends up, and I'm also worried about zinc. Zinc is the one that is going to have to grow. PGMs, it's interesting. We have some 150 years worth of known reserves of PGMs. We know where they're at. It's just nobody's lining up to get into deep shaft, half mile to mile deep mining on the South African Bushveld complex anymore. And yet maybe that's exactly what's needed. Not only to get the platinum, but to get this important ruthenium and iridium at the same time as well. For those of you who know the differences in PGM deposits in North America and in Russia, the PGM miners play a much smaller role. You'll have palladium-centric deposits in Russia and North America, and yet we're going to need the platinum. I've done work with people looking into uranium and hafnium and zirconium. That's an interesting space when you talk about, hey, what if we grew nuclear 3-4x from today? So these give you a depiction of just how much challenge is coming our way on these metals. And finally, just as a wrap up, I try to convey, you look at the mineral prices of this clean energy transition plan. Yeah, it's a very mineral intensive plan. And we saw lithium just spike like crazy, some 7-8x climb. And now it's come back down. Nickel, of course, there was the LME event there. Cobalt, so the battery metals are subsided a bit, but as these prices go higher, this puts a lot of pressure on that battery and the EV cost space. And I think the only way to achieve the sorts of mining that they need is for the prices to go back up. And I think we'll get there. We're going to be in some market balance on these metals for the next 2 or 3 years, but there'll be a point toward the back end of this decade where lithium is again going to become very much constrained. Copper, aluminum, and silver as electrification metals, same thing. We're seeing them spike, but they've come down about half of what they've spiked. The hydrogen economy metals, platinum has been on a decline for some 8 years and now is starting to bounce back up. Iridium has spiked recently, not related to the hydrogen economy at all, but just to other applications. Ruthenium has spiked. Neodymium for the batteries, all important rare earths. These batteries so critical to EVs, to windmills. moly, everything that's high temperature, you'll have moly that's critical. Tin goes into all sorts of technologies. All these are so important. And we're seeing a situation where these prices are very volatile. And of course, this commodity roller coaster, this doesn't serve the mining investment community at all. And this is the sort of risk that I think this clean energy transition plan, this is kind of the backdrop risk that I think we all need to be aware of. But meanwhile, we're sucking down the metals at an alarming pace. And anyway, I just wanted to kind of give you guys a quick glance at this. I got material in the backup, including some slides on myself, who I deal with, and whatnot. And with that, I'll conclude and turn it back to our moderator.
Perfect. Thanks a lot, Matt. That was a great presentation. So now we'll turn to the Q&A portion of the webinar, and just a reminder to everybody online that you can type in your questions at any point. With that said, we have had quite a number come in, so I'll just kind of start at the beginning here.
Sure.
In your vehicle analysis, you discuss passenger vehicle price. I assume this is the sticker price to the consumer, net of rebates, tax credits, etc. That said, what subsidy or loss per vehicle are auto manufacturers absorbing, and do you think that such losses are sustainable?
No, and the subsidy is a key topic that's going on right now. We're seeing subsidies effectively start to run out in the U.S., Europe, and even China. China's doing some extensions, but they're $7,500 in the U.S. Can be even higher in Europe. Those have been a substantial part of this early EV spike and demand spike. And have been a big part of that price climb that we're seeing. You're seeing the auto OEMs now very panicked. Tesla's already cut prices. We're seeing others come out now with aggressive pricing cuts. The Chinese, there's some price battles going on within themselves, within China, that's interesting to watch. And so they realize that the price is a big issue, and they're really having to respond quickly to get that back in line. You guys might recall, EVs were already supposed to be on par with, ICE vehicles. Clearly, they're not. And it's going to take a number of years for it to get there still.
Right. Okay. And then in terms of, I guess, sticking with vehicles, I'll just read out the question here. Obviously, not enough metals available. Things must change. Might auto companies have to start offering different designs and consumers adapt? Why do we need so many four-door vehicles that have only single occupants, are smaller vehicles, and a lot more car sharing the way the future generations will go?
No, vehicle ownership per capita is a big question, and how do we create a shared economy is probably one of the most undeveloped potential items to help reduce emissions. I agree with that concept. Metals are going to be taxed. It's just it's a complex landscape right now. I can spend an hour answering that.
Right. Okay. And let's see here. Lots of questions flooding in. Okay, we'll go to this one here. Do you think free market metal prices are realistic? Are new metal pricing models required for North America?
So one of my big peeves, I get hung up on ESG as a topic that you guys are all very familiar with. I think ESG is so misguided and misdirected right now. When you look at some of the mining environmental sins that are going on with rare earths, for example, why the hell are we even doing business with China on rare earths? They're doing it in such a polluting fashion. We got to get to a point where green streams of metals, whether it be a green copper or a recycled metal stream, carries a couple percent premium. And I think the metals markets are struggling having that occur across the board. And there's some cases where clients are willing to hunt for a green metal stream, but we got to make that more the standard. And I think that's the path on how you can help self-correct some of these ESG sins that are actively going on in Indonesia nickel mining or in REEs, for example. We've got to get to the point where people are willing to pay a 1 or 2% premium for a clean stream, and even give the recycle streams this premium, value in that proposition. And can you do that legislatively? I'm more a fan of trying to arrange it in that fashion than I am on carbon taxes. I think that's a more direct path to get you to the right responses from the mining community.
Right. And you mentioned recycling there. Are we doing enough on that front? Is there a big enough push on that to help demand? Is it a technology limitation, or is it behavioral? Obviously changes are going to have to be made. As you pointed out, it's 10 to 13 years for EV life, so there's going to be a lot.
So just real quick, so on the recycle front, the PGM recycle, for example, on AutoCADs, it's a pretty closed loop system globally, a pretty good system of capturing. You guys know about the lead, right? About 85% of the lead market is recycled material, so very good sustainability. Ruthenium and iridium are actually some of the highest sustainable products on the whole periodical table. They have effectively recycled and matches the mine supply every year from both. So that's encouraging. The battery recycling, I think there's going to be an implosion in these there's been all this Green New Deal money that's gone to fund a lot of these battery recyclers. There's too many of them early. It ends up when you do the analysis, and even people like Umicore, who I work with, they've been very upfront. The first decade, you've got to have access to OEM and battery scrap streams that'll be about 60% of your recycle volume. The end of life volume isn't going to be quick enough to keep these recyclers active. And so I'm worried about some of the early seed money being too early, and there's going to be some infant mortality on a lot of these battery recyclers that can cause a problem. The metal recycling space, though, I think is in a much more secure place. Copper, I always tell all my scrap collectors, get into copper. That's a fairly easy play. The problem, though, with recycling on rare earths and a number of these elements is they're just too cheap. Not that you can't recycle, you can, but you'll spend more on treatment charges doing recycle than what the metal's worth. And so in those situations, like on LFP batteries, which are underwater to recycle, where you only get the lithium out, you'll spend more on the treatment than what the lithium's worth. Governments are going to have to subsidize that recycle process and make sure they do get to recycle in spite of the fact that they're underwater economically. So prices of the commodities have a lot to do with the success of that ability to recycle. And there's some interesting things going on with magnet recycling that I think is fascinating, that if you're in the rare earths, please get a hold of me. You hear about Apple using 100% recycled rare earths. Well, how's that happening? Nobody else is able to do that. So there's some interesting approaches to recycle that are occurring that are new technologies that are going to work great.
Great. Okay. And we had a question come in. You mentioned LFP batteries. So we had a question about where's the phosphate on this? LFP batteries are the next gen, and there's no excess supply in North America. Yep. Lots of imports.
Yeah, and of course, with all the the synthetic fertilizer market as well, the phosphates are an interesting proposition too, right? You've seen a big explosion in Morocco, with the Ukraine disruption going on in Russia. You've seen, a lot of the reserves are in Morocco, so we're seeing the phosphates, and I think it's appropriately so. You got a willing participant in Morocco that wants to develop those assets. So I think that's encouraging. There's a lot of things that the battery guys are interested in with high purity phosphates. I know I've talked to people in Canada about some high purity phosphate streams that could carry a premium in the battery space. On that question on the technology on the batteries, what technology changes do you see happening in the battery space? It's not coming very fast. And in fact, the whole transition back to LFP, that's going back to a 25-year-old design. That's not new technology. That's going backwards. And I'm in the Silicon Valley. I'm used to dealing with technologists in all these electronic industries where they're really driving the next thing. We're slow on deployment of solid state, for example, in the battery space. It was largely supposed to be underway already with completion in 2025. Those timelines have slipped. And so I think the battery guys are so obsessed with just the ramp, they're not as obsessed about the technology as I think they should be. And yeah, we need to keep exploring. Next generation batteries are going to be some lithium salts, some lithium sulfurs. There's a couple different avenues they're looking at to get the batteries to be cheaper, with not so much EVs, but more with standalone storage technologies. So there's a chance for some chemistry changes, but it's just not coming fast enough, frankly. Okay.
And with respect to Russia, as a major mid-sized exporter of many of these critical minerals, what effect do they play given the indefinitely lasting sanctions, and which metals have you seen the biggest impact and disruption, and any future predictions?
So I didn't mean to skate over it in this PGM discussion here, but so Norilsk, the Russians, who are good friends of mine, I've worked with them extensively over the years. They're concerned about the price of palladium. If you look at the periodic table, And people ask me, well, what, all these metals are going up. What metals are going to go down? Palladium has got the biggest risk. And so here's the Russians with the world's biggest single nickel mining deposit, which, oh, by the way, generates the world's largest amount of palladium at the same time. And they're very concerned about that palladium part of their basket, and they're trying to prop it up. And frankly, we are going to get into a systemic structural surplus on palladium, as there's about 1.5 billion vehicles on the road that will have on average, over 4 grams of recoverable palladium per vehicle. You can work the numbers. That's a buttload of palladium that's going to come back through natural recycle processes. Well, today, 85% of that demand goes into AutoCADs. Well, what if the ICE demands drop? Of course, the AutoCAD demands are going to drop with it. And so there's projections on all this stagnant surplus that are going to build up. The Russians have seen this coming for a decade. They started talking to me about 3 years ago about this. We organized a contest. What do we do with palladium next? The Ukraine invasion blew up that contest called the Palladium Challenge. There was a news release that came out today from Norilsk where they're coming up with the next generation palladium demand. But there's going to be a race to pick up the slack in palladium. Can we rearrange some of the PGM demands to push other applications into palladium that aren't there today? So I think that's really going to be the challenge for the PGM miners, including Norilsk, to answer your question.
Okay. Perfect. And in terms of the spectrum of metal supply constraints, which one or two metals exhibit the worst choke points for EV production?
Well, the copper, the nickel, lithium is an interesting one. With all these plans to go big on the lithium, the one topic to pay attention to in the lithium space is direct lithium extraction, which is a process that will be effective to get us to work with the brines, with the salt flats. Some 60% of the lithium deposits are in those salt flats. We know huge amount of the inferred resources are in the salt flats, like the Salton Sea close to me in California here, a dried up lake bed. And if they can develop that and do direct extraction, not just to go directly to the intermediates, but do it with a low amount of water consumption, then we can start exploiting these salt flat deposits at a much bigger pace than we are today. And one of the simplest ways to express this is you don't need as many mines. I think you get away with some big ass lithium projects and processing, do fewer of those. And I think those are easier to fund and to grow than to do a couple, 300 individual small junior miner projects. If we could conquer lithium direct extraction with low amounts of water consumption, the conventional leaching process today is 2.1 million liters of water for every ton of lithium processed. That's unsustainable, especially in the high deserts of Argentina and Chile and others, where a lot of these deposits reside. There's not enough water around salt flats. You got to come up with a process that could do it with the least amount of water or with recycled water. One of my clients is indeed working on this. There's about 4 trials that are going on with direct extraction right now. And again, we need direct extraction to be successful with low water consumption. So I'm really keeping an eye on that. Can that change my outlook on what that lithium market looks like in the 30s and 40s? Certainly it could in the 30s and 40s. Yes. Does that make sense?
Yeah, I think so. Yeah, that works. Okay, so we've had a couple questions come in with respect to, big mining audience. So just wondering kind of what some solutions are. Do you think governments are more likely to facilitate and streamline permitting or back off on targets? And, what can be done to increase the speed of mining, essentially?
I'm actually, regional selection becomes as important as ever. What's your energy and water supply? Starting with those fundamentals. Do you have a clean energy source that you can use? The emissions from mining and all the assets that we're using are catching more attention and will continue to catch more attention as we scale this. So you really got to be sharp on your technologies and what we're going to be able to do. I personally think one of the big failings of the critical and precious metals world as a whole is we're not investing enough from a government perspective in separations and refining technologies. I deal with Umicore, BSF, other big, huge refiners on the planet. And it just shocks me, when you go to these refining houses, they're basically a job shop. They deal with all these different scrap streams, and they tend to use 2 or 3 common processes to process them, to recover. We got to get more creative. We got to put R&D dollars into developing new organic chemistry separation technologies that can do more faster and cheaper and cleaner. So I think that's a kind of we're missing the mark with the processors and with the smelting operations. Where are we going to put the smelters? We went through the energy crisis in the EU over the past year. Smelters in Europe were not the place to be. I don't care if it was for aluminum, copper, whatever. Every heavy industry and heavy chemical operation was completely under assault in Europe with energy prices during that past year. Now they've subsided quite a bit. They're back down nearly to pre-crisis level. But think about the energy strains on the grids that are going to develop. Man, having a secure path. Look at what's going on in South Africa with all the load shedding that's going on right now. What a mess. That's got to be a bigger part, I think, of the decision set with the major mining approach in what they're doing, where they're selecting, which projects they're going after, and where they're going after them.
Right. Okay. Perfect. So another question here: will solid-state batteries become a commercial reality soon enough to improve future supply or demand dynamics?
Well, again, the cathode materials, the lithium, nickel, and cobalt, that doesn't change with solid state. All the solid state does is it changes your electrolyzer. Today, it's a liquid electrolyzer. Yeah, we've all heard about like Teslas that get very low frequency, but they'll get in a rack and they catch on fire. And the fire department, they have a problem. They spraying water on a battery fire doesn't get you anywhere, and so they either use foams or they don't do anything and let it burn itself out. So when you go to solid state, they're going to go to either a ceramic or a gel electrolyzer. That's the only thing that changes. And so a lot of those fire risks will go down. That will give the designers a little bit more design space to play with, to push energy density a little bit harder, where today they're making trade-offs for explosion and fire risks. They, when they get to solid state, they don't have as much risk, so they can push the performance a little bit. So that's good. But beyond that, I don't think the solid state is going to have that much of an impact. You're still going to have all the graphites on the anode. The big question there is the transition to silicon, some of the silicates and what's going on. But, there's a lot of pressure on the graphite markets as well, as we know.
Right. Okay. So I just put out a call to viewers. We're getting close to the end of the questions that have come in. So if you do have any last minute questions, please send them in. So that said, we have one here. Can you explain the chart on short supply of iridium, platinum, ruthenium, et cetera, et cetera? You're able to do it without pulling it up or not, but
yeah, can I I'm trying to oops, can I share the presentation? I don't know if I can.
Yeah, we can see it now.
Oh, you can. Okay.
Yep.
So the question was, let me go page up. No, I'm sorry, it's going to take me too long. We're talking, okay, so, all right, let me go. So first of all, iridium. Yeah, so today, automotive, that's largely spark plugs, chemical. There's iridium is used as a catalyst in a number of, not only chloralkali, but there's some spin-off chemical spaces where it's a catalyst. Electrical, we have it in the mix there as well. Electrochemical is one of the bigger fields. That's folks like De Nora and whatnot in the wastewater treatment, chlorine production space. There's some investment demands and a whole bunch of hodgepodge of strange stuff. Fuel cells, you'll see a little bit of use of iridium in reversible fuel cells, but for the most part, it's going to be in electrolyzers. This shaded area is these green hydrogen PEM electrolyzers. It's going to be the primary demand pool for that in time. And again, the lower high case, and I think I have these backwards. This is my low case and high case. I have them backwards. My apologies on that. On the ruthenium, jumping ahead. Here we go. Ruthenium is pretty well spoken for again today as well. Again, a lot of chemical, it's nylon, caprolactam, all sorts of electrical applications, including my hard disk drives. You're seeing it used more and more in advanced semiconductor. Electrochemical, again, back to the chloralkali space, people like De Nora. In that space, you'll see ruthenium and iridium used as a set, as oxides. Smart glass, you got people like Gentex and people that do auto-dimming mirrors. So Gentex is, pulling some 50,000 troy ounces a year in consumption on their own. And there's others, and you'll see smart glass start to expand. And then again, fuel cells, you're going to see a little bit of ruthenium that ends up in fuel cells, like with Ballard and some of the heavy duty OEMs are mixing in it's like a 94:6 ratio between platinum and ruthenium. So hopefully that answers the question on the ruthenium and iridium.
Yeah, that sounds like a good explanation to me. It should hopefully answer that person's question. You just have your camera off, so yeah.
Oh, I'm sorry.
No worries.
Cancel. How do I turn it off?
Corner of your screen there. The box.
I'm not sure it's letting me do that. We'll go on with your question while I figure this out.
Okay. Yeah. No, I think we're just we're getting down on questions here. So I think if you have any kind of high level thoughts or solutions for the space, and what your outlook is, any predictions, maybe just leave the viewers with some thoughts, and
sure.
We'll wrap up on that, since we're it's been a solid wrap
sure.
up Q&A session.
Well, the where I touch the ecosystem that I have the most impact is a lot of these recyclers, and so we're doing things to try to accelerate and get more out of the platinum recycle that already occurs. There's streams like on spark plugs that aren't recovered today on iridium that I'm trying to pick up another 40,000 troy ounces a year, get that back into the system, and from things like spark plugs. And we've got clients that are developing and launching these new recycle processes. So I'm trying to have an impact there, but more than anything, I'm just trying to alert. I think from a government perspective, out of all the trillions and trillions of dollars that we're spending on this Green New Deal, you'd be better spending $1 trillion of government-funded support for platinum group metals in particular. I think that's one that has I go through these analysis. I can show you the CO2 impact versus the cost of mining, but $1 trillion in that space is nothing. We're going to be spending 15 to 20 trillion dollars on all these others. And again, it's unfortunate, but on the EV front, I could dig through all the emissions numbers. We're putting EVs up on a pedestal like they're this change-all entity that's going to just magically fix the environment. And meanwhile, back at the ranch, we're burning record levels of oil and coal. So, are emissions really going to go down? Yeah, with this plan as it's developing right now, no, it's not. I think the emissions on EVs are way overstated on how much beneficial they are. I'm a bigger fan of hybrids. I think we're making a mistake banning ICE vehicles, which will include hybrids, like the Toyota Prius as an example. The hybrids and plug-in hybrids are a key part of what's moving the numbers on the emissions in Europe on the vehicles. They're much smaller batteries. I'm a bigger fan of putting hybrids on every vehicle and having batteries that are about 1/10 of the size of what goes into a Tesla. The Tesla batteries were just too big. And now we're going to start moving into big, heavy vehicles and SUVs and Hummers and everything else with just enormous batteries. They're just massive. A Tesla battery is 1,200 pounds of material, right? On trucks, they're going to be putting in 8,000 to 12,000 pounds of battery metals chewing into your 80,000 pound payload on a semi truck. People just have a sense of the scale of the amount of material that's going to go on here. It's just shocking. And I think the end result, we're not going to move the needle on emissions the way people think. I think we're going to be increasing prices and driving inflation to a certain extent. I think the only way for this mining plan to succeed is through inflation, is through those commodity prices climbing, is the best way to get there and to get the mining investment that we need. And so I think it's a touchy situation here. And again, you need to be aware of your risks both ways. And I look at wind and solar; they're not stopping. They're just going to keep pushing wind and solar. The EVs and the vehicle, powertrain mix. I think we're starting to feel the lead again of a pendulum swinging back the other way. Are we right to push this and mandate this by 2035 that we're going to have EVs across the board? I think that's being challenged more and more, and will continue to get challenged. So I think there's some risk in the space that you got to have your ears open and listening to the whole, all sides of this thing. So.
Perfect. Well, it's an excellent, high level outlook and some predictions there. And thank you very much for giving the excellent presentation today. We've had quite a few comments saying it was a fantastic presentation. So with that, I would like to thank Matt from Precious Metals Commodity Management for taking the time today to host the webinar with Red Cloud Securities. And thank you to everybody for tuning in with us.
Thank you so much, everybody.